Well, that was quite a week in the stock market. We reviewed 3 different catalysts last week going into this week, and that created a whole bunch of stock volatility. Additionally, we had a couple of surprises. So let's go over what happened, figure out where stocks are going to go from here, and figure out what's going on with Bitcoin. Which way is it going to move next? First, let's kick off with the stock market and talk about the 3 catalysts that we talked about last week. First, there was the Fed meeting on Wednesday, and exactly what we thought was going to happen happened. Jerome Powell came out and raised the interest rates 0.25%. The part that was going to be tricky was the press conference, and Powell came out a little bit hawkish, which kind of freaked out the markets and caused a sell-off going into the close on Wednesday. Things didn't improve much on Thursday when the regional bank crisis started up all over again, and these small banks started selling off in a big way. However, after the close on Thursday, Apple came out and reported, which was our second catalyst, and in this case, Apple surprised to the upside. While reports were true that Apple wasn't going to make as much money in the Mac units as they thought, as I said last week, that's not where they generate the majority of their revenue, and they did surprise to the upside on iPhone sales, which is where they make most of their money. Apple ended up earning $51.33 billion worth of iPhone sales in the quarter, whereas it was expected that they would only earn about $48 billion. So it was an upside surprise. On Friday, we had our third catalyst, which was the non-farm jobs payroll report. And the expectations were that we were only going to see an increase of 180,000 jobs in April. Instead, the job market increased by 253,000. So the stock market took this as positive news, and we ended up rallying into the end of the week, even though we ended up finishing about 1% lower than we did last week. Now that we're through all of the big tech earnings that really mattered, we're still going to have some earnings reports next week, but it doesn't look like it could be as good as what we've been seeing so far. The industrials and a lot of the other stocks aren't reporting great earnings. Additionally, we get the consumer price index, the CPI, and the producer price index, the PPI, next week. And it's expected that both might actually show more inflation than we want, given what the Federal Reserve has already done when it comes to interest rates so far. However, that being said, the bears I follow are still bearish, and the bulls I follow are still bullish. So when we go into next week, it's anyone's guess what's going to happen, which is why I always have a plan for both directions. What am I going to do if stocks go up next week, and what am I going to do if stocks go down next week? In Bitcoin, you can see that the price action continues to bounce around within a pretty strict trading range. And although we have broken out on Friday above those parallel channels that I've been using for the past 2 weeks, that doesn't necessarily mean that we're breaking out to new highs. Bitcoin is kind of in a holding pattern, and it's really anyone's guess which way it might break from here. However, personally, I have seen over the years that I've been in Bitcoin that it is more of a risk asset, and it correlates directly to the stock market risk assets. Accordingly, I'm not too optimistic about which way it'll go from here. If we see debt ceiling debates next week or any negative catalysts, I believe Bitcoin will sell off with the rest of stocks and any other risk assets. That being said, the fact that it's been holding up at $29,000 is positive. It's just which way it's going to go from here. As you can see on the charts, we have a key level of support down here at $26,950, and that needs to hold. That is key all the way back, and if it breaks that support, we're probably going to see much lower lows. Going down, you can see that we might have support down here around $25,600, and then more support down here around $24,500. Or around that point. Going back in the past, we've got our $23,945, our $22,000 even, and our $20,627 before we get the low of this year at $19,300. As I've said before, I'm always hoping for a big sell-off in Bitcoin because I want to accumulate more, and I don't quite like the levels where we are right now. There isn't anything positive going on that would indicate Bitcoin will make higher highs from here. In my portfolio, this week's winner was Coinbase, which was up 8.27% on the back of a surprising earnings report. Many analysts thought Coinbase was going to disappoint, but thanks to Bitcoin rallying for the first quarter of this year, Coinbase reported excellent earnings. Coinbase is not directly correlated to the price of Bitcoin anymore, It should be a much higher stock price if it were. However, there are a lot of bulls that believe Coinbase is going to go higher from here. Alternatively, there is the question of the SEC Wells notice. The Securities and Exchange Commission has warned Coinbase that they are investigating them and may bring them up on charges. If that happens, it's obviously not good news for Coinbase, so we'll see where it goes from here. This week's loser was SoFi Technologies, which dropped 17.17% on the back of its earnings report, which was actually a good report. The problem is that SoFi has seen an increase in short-term loans, and this is not a good thing when you're heading into a credit tightening sequence. It's possible SoFi could get smacked hard by delinquent payments. For me, SoFi is just like the rest of the positions in this portfolio. It's long term, so I'm willing to be in it for quite some time. But where we go into the future for the next couple of weeks and months could be pretty shaky for this new fintech bank. Over in speculation and play, this week's winner was DraftKings with a 12.09% gain based on the back of its earnings report, where it surprised to the upside, bringing in significantly more revenue than was expected. Additionally, DraftKings' guidance going into the rest of this year is really surprisingly good, and it looks like this sports betting play has nowhere but upside from here. This week's loser was Lyft, which was down 15.8% on the week based on a bad earnings report. The new CEO hasn't been able to make the company profitable, and worse still, he has no signs of wanting to do so, saying that he's rolling all additional cash flow into growth instead of profitability. In a rate-tightening environment with a potential recession on the horizon, this is not the kind of stock that any investor wants to be in right now, and that's why it sold off quite so substantially and was this week's loser. I took more profits in Barrick Gold this week on May 3rd at $19.75. As I've said before, I am bullish on gold for the long term, but I've been burned too many times by the precious metals. Whenever the bulls get really excited and they say, this is it, gold's going to skyrocket, it almost invariably hits resistance and then sells back off a lot. Accordingly, my sale took in 11.9% in gains on shares that I bought for $17.65 last year on June 30th. The sale lowered my per share cost 0.25%, down from $18.75 to $18.70. And from here, my next buy target is $15.89, a point of support we've seen in recent months, and my next sell target is $22.60, a point of resistance we've seen recently. Added to Canopy Growth Corporation when it continued to make new lows this week on the 2nd. With a buy at $1.20. Now, I know that previously I said my last buy was going to be at $1.09, but when I saw the price action Canopy was experiencing, I decided that I would split that last buy up into two, one at $1.20, and then my last one, which will now be at $1.06. This buy lowered my per share cost 2.22%, down from $4.50 a share to $4.40 a share. And from here, my next buy target will be $1.06, slightly above its all-time low from the past. And my next sell target will be the next point of resistance above my new cost basis at $4.55. As I've said before, the cannabis sector is just getting smacked hard, and there's no sign of relief until Congress passes that Safe Banking Act. I also said in my recent video review of Canopy Growth, it's possible that Canopy could go bankrupt, and I reiterate that here. I've locked in the maximum amount I'm willing to lose in this stock, and I will not lose any more than that. Once I hit $1.06, I will not put any additional funds into this stock. On Monday, Logitech started to rally into its earnings report, so I decided it was time for me to take all of the capital I had remaining in this position out of it. I opened my position in Logitech 6.5 years ago on November 11th of 2016, so it kind of feels like I've been in this position so long that it's time to take that original capital out. And whenever a company rallies into its earnings report, I always take at least some profits. You're entering a binary event. Either it's going to be good or bad, so it's best to take something off the table just in case it is bad. My sale locked in 154.09% in gains on shares that I bought for $24.20 on November 11th of 2016. As I said, this sale removed all the remaining capital from this position in addition to some profits, lowering my per share cost from $10.64 to negative 81 cents, which means I have taken all the capital out in addition to 81 cents per share of the remaining shares I hold in this position. From here, I will add more back into this position if it hits its low of $42.48, slightly above its 2022 low, and I'll take profits at $78.92. Another nice part about Logitech is it does have a dividend yield, so even though there's no capital in this position, it will be generating income for my portfolio on a yearly basis. I took profits in Microsoft on May 2nd at $308.75. The artificial intelligence craze has been great, but Microsoft and all the rest that have any relation to it have been really rocketing higher, so I keep peeling off profits. As always, I keep the majority of the position. I'm just selling a few shares at a time because the higher Microsoft goes, the more I want to take profits off in case it does roll over. This sale locked in 50% in gains on shares that I bought for $205.83 on December 11th of 2020, and the sale lowered my per share cost 34.23%, down from $175 to $115.10. From here, my next buy target is $219.85, at a point of support quite a bit above 2022's lows for Microsoft, and my next sell target is $349.47, slightly under Microsoft's all-time high. It was time to take profits in my short position on the S&P 500, which is the ETF SPXU, and an inverse leveraged ETF that does the opposite of the SPY based on a factor of 3. When the market started to roll over on May 4th, I decided it was time to take profits at $14.15, and this locked in a gain of 7.93% on some of the shares that I bought for $13.11 a few weeks ago on April 28th. This sale only lowered my per share cost 0.36% from $13.80 to $13.75, but it wasn't so much that I wanted to lower my cost basis as it was I just wanted to reduce the size of the position that had grown quite large. From here, my next buy target is $12.55, slightly above a past point of support, and my next sell target is $15.55, slightly below a point of resistance that this asset has seen in the past. It was time to add more to my U.S. natural gas fund position, UNG, on May 3rd at $6.25 when UNG tested its lows. The buy ended up locking in a 36.42% discount on shares that I had sold for $9.83 back on March 3rd, and it lowered my per share cost 2.94% from $8.50 to $8.25. From here, my next buy target is $5.25, a price calculated using the Fibonacci method, and my next sell target is at $8.65, slightly below a point of resistance that UNG has seen in the past. As we continue through May, I expect volatility to increase. Whether we're headed higher or headed lower is anyone's guess, but it's going to be an exciting week next week, so we'll see what happens. If you want to learn more and follow along in any of the moves in any of my portfolios, you can do so 100% for free at my website, getirk.com. Please hit like and subscribe. It really does help me out, and I'll see you in the next video.